A second to upload the window. Okay, here we go. Okay, very good. This is the Fibonacci retracement tool, yeah, that we measure the retracement, and this is the Fibonacci expansion that we measure the targets. So how much bigger C is from A, or how much bigger 3 is from wave 1. So let's see how we use them. Let's go to a template like this. Okay, let's say here we had wave 1. This is wave 1, yeah. Give me a second. We'll take it slowly so you understand. This is wave 2. This is wave 3. This is wave 4. And this is wave 5 ending up there. Okay, very good. Now, our Fibonacci retracement, what did we say? We need to see the retracement of wave 2 in order to get in long for wave 3. That's what we are looking for. We want to trade wave 3 because, as you see, is the longest one, is the sharpest one. That's the money we are looking for. So we have the guideline that wave 2 usually retraces 61.8 of wave 1 or more. So let's see. We start our Fibonacci retracement loop from the bottom of wave 1 until the end of wave 1 there. Look how beautiful. 61.8. The market retraced to 61.8, and then from there on it never looked back. So that's a very ideal, healthy wave 2. Retraces to 61.8 of the Fibonacci retracement tool, and then from there you go on for furthermore. So now let's see. We said wave 4 usually retraces 38.2 of wave 3. So we drag from the start of wave 3 until the end of wave 3 here. Here, in this case, wave 4 didn't retrace all the way. It was a bit shorter than expected. But again, the 38.2 is not a rule. It's a guideline. It doesn't mean it's happening every time. It means it's happening most of the time. In this case, it didn't happen. Okay, fair enough. We can't have everything. That's why I explained you before. The markets are not perfect. We follow some certain rules and guidelines, yeah, but it doesn't mean they are met every time. In this case, it will be an ideal entry point. In this case, we wouldn't have taken the trade because it didn't retrace where we wanted it to retrace. That's fair enough. Let's see another setup, another 5 wave here. We have wave 1. We have wave 2. There you go. We have wave 3. And we have wave 4. And down here wave 5. Okay. And this is the wave 3 again. Within wave 3 we have the 5 subwaves. This is wave 1. We have wave 2. And there you go. Here is wave 3. This is wave 4. And this is wave 5. And as you can see, guys, here wave 5 is a truncative wave. It just reached the bottom of wave 4 and it went up for the further correction. So here how a truncative wave looks like. It doesn't make a lower low. It doesn't pass. It doesn't progress. Okay, very good. So let's see the Fibonacci relations here. This is wave 1 and 2. So we start our Fibonacci retracement from the top of wave 1 until the bottom. In this case, it retraced a bit more than 61.8. But again, our rule says wave 2 doesn't pass the 100% of wave 1. So it's still valid. But you see, it went to 61.8, a little above 61.8, and then the market went down from there. So this is the level we are looking for. I mean, here is what we are looking for. This level, 61.8, to go short on the market if we believe that it was a downtrend. That's the golden ratio. That is the level we are looking for to take our trades in. Okay, very good. Again, let's see now for the subwave wave 2 here. Again, we'll start from wave 1 to the end of wave. Again, guys, 61.8, the market spike a bit above, then all the way down. Again, a nice, good wave 2. It retraces usually to 61.8, and from there on you take the trade down. Now, let's see the two waves 4 here. From the start of wave 3, we said, until the end. Okay, here, let me delete this preview so it's not confusing for you. Okay, here wave 4 again was short, only 23.6, and the market came down. Okay, that's fair enough. Let's see now the subwave wave 4. The subwave wave 4, look at it, guys. Came to 38.2 and straight down from there for a subwave wave 5. So as you can see, sometimes wave 4 goes to its guideline, sometimes it doesn't. But it's a guideline, it's not a rule. That's why you need to be flexible, you need to be open-minded. Okay, in this case we have 5 waves down. How we measure about the guidelines we said before. Wave 3 we said, usually, yeah, is 1618 of wave 1. Let me do that again. For this we use the Fibonacci expansions, this one. You drag your first line from the start of wave 1 to the bottom of wave 1. Then you double click and you put the third point at the start of wave 3. In this case, when wave 3 finished here, much more than 161.8, it means it was overextended. We can add another level here if we want to, which is going to be the 2.618. The market doesn't really go to that one many times, but when a wave is overextended, it usually goes there. Okay, we do like this. There you go. It didn't reach exactly, almost reached there. Okay, now let's see the target of the subwave wave 2. We start again from the start of wave 1 to the finish of wave 1 and of the start of wave 3. Again, overextended wave 3, yeah, that's why we had truncation here. Remember what we said, if wave 3 is overextended more than we usually believe it's gonna be, which should have stopped here, it even passed this point, then wave 5 could be truncated, and that's what happened here. That's why we have a truncative wave here, truncation, because wave 3 was overextended. Now, let's see the guidelines for wave 5. We said either wave 5 is equal with, either wave 1 is equal with wave 5. In this case, wave 5 is a bit smaller, yeah. Or, sorry, this is the wave 1, that is the subwave, yeah. Okay, this is the wave 1. In this case, wave 5 is a bit bigger than wave 1. The other thing we can do is, we said wave 5 could be 0.618 times of wave 3. So how we measure? We start from wave 3 up to the bottom of wave 3 and then to the start of wave 5. In this case, it didn't come there because the market already was overextended, so it made a truncative wave. But let's see if it did in the big wave down, from here to here to here. It didn't reach exactly. It could have, but it didn't reach exactly. So this is not the healthiest Elliott wave, let's say, we could find. You see, some of the guidelines didn't meet. Let's see here what happened on this one that we analyzed before. Okay, let's first measure the wave 5. Look, guys, look how beautiful this was. Wave 5 finished exactly at 61.8 of Fibonacci expansion. This means that wave 5 is 0.618 times of the whole wave 3. So here the guideline was met in perfection, not even a few pips above, in perfection, guys. So you will see when you start trading live that sometimes the guidelines are met like this, so beautiful, sometimes are not. So you have to be flexible and choose your battles. We don't want to trade everything in the market. We only want to trade the setups that meet our rules, meet our guidelines, and they look right. We want quality trades, not quantity trades. If you hear people over trading and day traders and scalpers, those people don't make money. Quality over quantity, that's what a good, successful trader looks for. Quality trades, few good setups, but you make all of your money from those good setups. You don't need many trades, you only need few but good ones. Okay, very good. Let's see some other examples maybe. Let me see if we can find right now in the market. There is a very good setup here. This one. Let me remove all these so we analyze them together so it's not confusing for you. Okay, here we have, again, let me help you with the waves. We have wave 1, is pretty simple, it's very obvious. We have wave 1, yeah, there. We have wave 2. We have wave 3. We have wave 4. And we have wave 5. Okay, here, even within the wave 5, which looks to be the bigger one, they look to be similar with wave 3, but I think wave 5 is bigger. No, actually it's not, it's slightly smaller than wave 3. Okay, in wave 5 here you can even see the subwaves without having to drop a time frame down. This is 1, this is 2, this is 3, this is 4, and this is 5. So these are the subwaves of wave 5. But okay, we have here our 5 waves down. So let's see what happened on our retracement and expansions. Wave 2 retraced a bit above 61.8, but again, you see guys, the market almost always comes to this level. Okay, sometimes it passes a bit above, but it doesn't matter. We don't treat the level as a level, we treat as a zone. So if you are gonna be an aggressive Elliott waves trader, if you short exactly on this level, then your stop loss has to be above here in order for the trade to be valid, because we know that wave 2 can't pass this point. So for safety, you put your stop loss above here. If you are gonna be a conservative Elliott waves trader and you are gonna wait for the price action first and then short, then you will have shorted after this candlestick, so you will know that your stop loss should be above here. So both ways are valid. Okay, now wave, let's do it again from the beginning. Wave 3 to see the trend of wave 4. Look guys, 38.2, like our guideline, it goes for wave 5. So this is a very healthy Elliott wave. 61.8 here, 38.2 here, and then the complete pattern is finishing here for the impulse phase. Now there's see the retracement, the expansion, sorry, the targets. Wave 1, how big was in comparison with wave 1? Well, it was an 161.8, it finished a bit earlier. Okay, it didn't meet this guideline, but that's fair enough. We said these are guidelines, they are not rules. And let's see, wave 5 obviously is bigger than wave 1, so we don't need even to check about it, you can see by the eye. Let's see about the 61.8, the relationship. It's not, it went a bit more than that, it finished only equal with wave 3. Okay, so the guideline wasn't met here as well for wave 5, but you could have found the end of wave 5 in a different way. You could have analyzed the subwaves of wave 5. So if you have drawn this, then around here it should have been the end of wave 5. Okay, the market was a bit exaggerated a bit here, it was a bit aggressive and spiked below. Yeah, and now we have an A going up, yeah, here, and B going down, and a C coming up here. What is this, guys? This is an expanded flat. Remember our theory, we said wave A goes up, then wave B go below A, and then 5 waves up for wave C that has to come above wave A. That's the exact definition of an expanded flat, guys. Wave A, B going below wave A, and C coming up in 5 waves above wave A. These are the 5 waves, guys. This is wave 1, 2, 3, 4, and 5. Okay, very good. Let's see something else. Let's see just this one, let's see, for an example. Okay, here we have 1, 2, 3, 4, 5 for wave 1, and this is wave 2. Let's see the retracement of the Fibonacci here. Almost to 61.8, guys. It came a bit short, but again, the market is not perfect. So you need to be aware of these things. I mean, if it doesn't come and touch exactly here, be aware of your trade. Be aware that the market is not exactly perfect. Treat these levels as a zone. Like this, in this zone between 50 and a bit more above 61.8 as a zone. Okay, this is wave 1, 2, 3, 4. Again, guys, here another expanded flat is happening. This is wave A, this is wave B, and this is wave C that finished down here. I hope you can see this, guys. This is A and B, C. For B is a 3, 3, 5 pattern, we said, and down wave C. Sorry about that. Wave C and C down here. Yeah. Now let's see in terms of Fibonacci retracement from wave 3 in comparison with wave 4. Is it more than 38 points? I think it is. It looks deeper. Yeah. So what do we expect if it's around 50, almost 61.8? So if we have wave 4, we said deeper retracement at 38.2, then we should expect wave 5 to be an extended one. So this guideline here help us to identify wave 5. This is live market, guys. It's a very good long for long term. It's gonna be an extended wave 5. And let's see, what did we say about the expanded flats? Wave B, we said, is either 1.236 or 1382 of wave A. Look how beautiful, guys. 138.2. So wave B is 1.38.2 times of wave A. Here is another guideline useful for you if someone wanted to take the sharp C, because the C of an expanded flat, we said, is a very sharp, devastating correction down. So you could have traded that one. It's a very nice, easy money. Okay, and the other guideline we said is that wave C usually is 1.618 times wave A. We measure it like this with the expansion from the start of wave A to the finish of wave A and then to the start of wave C. Look, guys, perfection is stop exactly at 1.618 times of wave A. I mean, what else can you ask for? This is just beautiful. This is perfection. You see how well sometimes the guideline works, sometimes they don't. So we only choose to trade the guidelines, the setup that work. We don't need the rest. We don't need the ones that don't meet the guidelines. So we know that this is wave 1. Let's label them so you don't get confused. This is wave 1. This is wave 2. 3. Actually 3 finishes here. This is the correction of 4. 4 and then 5 to go up. An extended 5 we expect based on the retracement of wave 5. Yeah. So how do you measure? Let's say this is wave 1 of wave 5. 2 is happening and we are trying to get a long from here for the rest of the waves. How do we find the possible target, let's say, of wave 5 is by our expansion, again, Fibonacci expansion. Usually it stops here, but since we believe it's going to be an extended wave, then we are looking for this price up here. This is the extended wave 5, guys, 1.618 of wave 3. Yeah, so it's a very big target, very big target. We have wave 1, 2, and we look for 3, 4, and 5 to go up. Okay, very good. I hope you understood a bit how we use the Fibonacci retracement and the Fibonacci expansions, how we measure the retracement and the entry points and the targets. In our last chapter, that is the final one, I will do live analysis again, but in all the pairs I have here and as a full guide. So I will label for you all the waves 1, 2, 3, 4, 5, then A and B, C for the correct phase, the sub waves, the Fibonacci targets, the entry points, I will tell you the exit points and everything, so you have a complete idea how I trade. And then, as I said before, follow our YouTube channel to see live trading, how I'm trading live every day, so you understand how I put the theory into action. This is the only way that you will be able to learn, and then study and study and study again and again and again until everything makes sense. Okay?
Yeah.